In this video, we'll be talking about investment securities. Now, when we talk about investment securities, we will be talking about the functions of Johannesburg Securities Exchange. We'll be talking about the different types of investment, the risk of those investment. We'll be talking about the 4 impact of forms of investment. Then we will be talking about the different types of preference shares and the difference between ordinary preference shares. Now we will be talking about the functions of JSE. JSE is Johannesburg Securities Exchange. That's where the economic growth of the country it is generated. That's where the country stay their economic growth. It's an open trading market where people they can trade. One can buy shares, one can sell shares. That is a Johannesburg Securities Exchange.
What is your function?
We've got many sects under them, but we're not going to talk about all of them because they're about 16. We're just going to scaffold them. We're going to select only few of them. The first point that it encourages new investment. When we say it encourages new investment, people who are not familiar, people who don't know how to invest, they're encouraged to go and invest there. And definitely they are going to get an assistant where showing them how to buy shares, how do shares make money, and how do they fluctuate. At times drop their value, at times the value accumulate. You are going to be assisted. There are people who specialize in doing that. Then the second point, it provides protection for the investors. The investors will be protected because the people who are working there, they specialize, they are regulated. If they're not going to do according to law, they know there will be consequences for them. For your investment, it will definitely be safe. And then the third point, shares are valued and are assessed by the expert. And then the other point, it acts as the link between the investor and the public company. How? Just like as a securities exchange, it gives a platform to the investor to go and buy shares. And then the public company, they know how they're going to sell their shares. So it gives them that platform. And the other point, it raises primary capital by encouraging new investment as listed in companies.
I'm investing.
Then the other point, give opportunity to financial institutions such as insurance companies to invest their funds in terms of shares. And the other point, it serves as a barometer or an indicator of economic condition. If one is sick, you go to the doctors, they're going to put thermometer under the tongue so that they detect how hot you are, how sick you are. So now the Securities Exchange, they use a barometer to indicate the economic conditions of the country. That's why we are told what rent now it decreases or rent now it increases. Then the other point, it keeps investors informed on the share prices because it is published daily. Let's end. And then we've got factors that should be considered when you are making investment. Being an investor, when you go and invest, there are things that you need to take into consideration.
What are those? What are those?
You cannot just take your money and invest it. Then you need to consider certain factors. Like, for example, the first thing, you need to know what profit are you going to make. The return on investment, we call it return. The profit that you make by investing that money, how much money you're going to get in return because you're invested that. That's very important. And now, when I talk about return on investment, it refers to the income from that investment, how risky that investment, and then generally, there will be a direct link between the return and the risk. You must know. The return should be expressed as the net after gain, and then the return can be in a form of capital gain where the assets appreciate in the value over time.
What else? What else?
Then the other fact that we need to take into consideration when we are investing, it is investment period. You as an investor, you are going to decide which you want to invest for 6 months, you want to invest for 3 months. It's your choice as an investor. Now, the lower you invest, the more profit you will get. The lesser you invest, the lesser the profit you will make. And then the short-term investment enables the investor to access their money quickly. And if you invest for a longer period, then you won't be able to access your money. Unless if maybe you've got crisis, but you are going to be penalized for taking your money before time. And then let's talk about the other effect that affects the investment, inflation. So now I know most of you understand what is inflation means. When the purchasing power decreases, that will be the inflation. The money that you used to buy groceries with, used to buy for 500 and you can buy what. Now, if the decreasing power is decreasing, then 500 rand, you're not going to buy what you used to. That is inflation. So now when you're investing, you need to think of that. People are affected by high inflation rate because of the purchasing power. Now, the return on investment should be higher than inflation. If you've made an investment, it should be higher than inflation. Inflation has a positive effect on some investment, such as property, shares, where the income will increase as inflation, it's not affected nicely. Then we need to talk about liquidity. Now, when we talk about liquidity, the other factor of investment, we are talking about how fast it will for one to change the investment into money that you need to take into consideration. Maybe we invested to buy a house. We invested in this house. You need to know before you sell the house, it will take maybe 3 months, 4 months, 7. It's longer. It's unlike if maybe you just make a fixed deposit with the bank. They'll tell you in 32 days, then you can get your money. Liquidity, it means how quick it is to change your investment into cash. Then, being an investor, you need to think of that. And then you need to think of tax.
Taxes!
After you've got your profit, how much will that profit be taxed on your house, on whatever, on the type of investment that you've made? Good investment will yield, will take out good after tax return. That's a good investment. Income tax implication must be considered in order to ensure that the net after tax return is favorable.
Risk.
Then let's talk about risk. Let's talk about in terms of shares. Shares, they have low, medium risk. It's easy for a share to drop. It's easy for a share to go high. It is, now the risk there, it's high. Maybe the director of Coca-Cola, perhaps you bought shares from Coca-Cola. Now, we find that the director has conducted himself in a wrongdoing, whatever. That could make that share drop quickly like that. So now, shares are regarded as a high type of investment. These are the factors that you need to consider when we're investing, guys. On page 13 here, we've got an activity that will assess you in terms of functions of JSE and the types of investment. Thank you very much for watching our video. Next time, we'll be talking about types of investment.